Okay, Geoffrey Dennis is independent emerging markets commentator. He's joining us now to take some questions. Jeffrey, good to have you with us here. Thank you for your time. You know, just a quick word on the presidential race in the U.S. and if the sort of attempted assassination of President Trump. What does it do to the race itself? I mean, elections are a little out, and markets have, I don't think, started trading that one way or the other. But what is your own sense?
Well, of course, it's a shocking development, which I think everybody should regret, and there's certainly a major attempt to try to play down some of the rhetoric that is going on post this assassination attempt. I think the net of this is probably it helps Trump in the polls as sort of, you know, if one can ever put this with respect to President Trump, ex-President Trump, a sympathy vote because of this assassination attempt. And also, I think if you look at Trump versus Biden, assuming Biden is still going to be the nominee, and I think the Trump assassination attempt takes a bit of pressure off Joe Biden short term to make his mind up about whether he's going to run or not. But I think the net is that the market would probably prefer a Trump presidency. And therefore, at the end of the day, this is probably something that does benefit the Republicans at the margin. And therefore probably is positive for the market. But I think the real issue here is this is a tragedy for the United States, a tragedy for the Trump family, and I don't want to make too big a deal of what the market implications could be.
Okay, absolutely. This is a big tragedy. I mean, the events that have unfolded are very, very unfortunate there. But Jeff, let's get back to tracking the markets because it's been phenomenal, the run that we've seen so far, whether it's in India or even in the US markets with the Dow hitting that 40,000 milestone. You've tracked emerging markets for the longest time. How do you see all of this playing out? Is it still, is the risk reward still in favor of investors to invest at this point in markets like India?
I do believe that's the case with respect to emerging markets. I think I've said on this channel before that one of the extraordinary things about this year is how the whole of the increase in the market, in the index, the EM index this year is down to two countries, Taiwan and India. And therefore, we really haven't had a broad-based emerging market rally. If you like, it's our version in EM of the Magnificent Seven in the US, although we're talking here about countries and not just individual stocks. Now, as we head down towards a Fed rate cut, and clearly now one is on the table, I think, for September, and I expect a second rate cut in December, that is going to continue to pull the dollar down at the margin, and that's going to push money out towards the emerging markets generally. So I'm not sure India would be the major beneficiary here because it's had a good run already, although I do like the story. But I think these events as they play out with respect to interest rates and a slightly softer economy are very positive for emerging markets, assuming the dollar continues to drift lower.
All right. Hi, Jeff. Good morning and good to see you. And you have said in the past as well that India is preferred over China. Now, if President Trump is going to make a comeback, it could make things a little bit more difficult for China. In that sense, on the equity market perspective, does it make China even more uninvestable, so to call it? We had the Q2 GDP print that came in, and irrespective of all the stimulus and all the talk, it still missed estimates.
Mm-hmm. Yes, the Chinese numbers are frankly still poor, and they're really making a very poor effort, I think, in trying to broaden growth out from exports, which remain strong, and investment towards the consumer, which is really what they've got to do as time goes on. Now, given that the focus here of growth in China continues to be mainly exports, when the Chinese economy is flooding the market, flooding the global markets with cheap production, which are products which are often being subsidized by the Chinese government. This is why the US and indeed other parts of the world, the EU, are concerned about Chinese imports and the potential, therefore, for there to be more tariffs. And so I think if Trump were to win, I think you'll get more tariffs. I think if Biden were to win, I think you may get more tariffs as well. It'll just be a more aggressive trade policy for ex-President Trump to win the election in November. Bottom line here is, despite this vast gulf in valuations between India, which is quite expensive, and China, which is quite cheap, the case is still much better, I think, for India over China. not least because China has not done the right things yet to get its growth going again on a sustainable basis, driven by consumer spending for the long term.
Okay, Jeff, we'll leave it at that. Thanks a lot for joining in and giving us your thoughts. That's the word coming in from Geoffrey Dennis, independent emerging market commentator, and his views on how to approach the markets.